Good morning, everyone. Good morning, everyone. It is Monday, January 6, 2025. It is so good to see you all this beautiful, amazing, very cold and chilly Monday morning here in Austin, Texas. Lots to go over this morning. But before we get started, let us welcome two brand new members to Team Price. One of them is Precious. It is so good to have you here. Your first very Team Price meeting. Precious joined us it was yesterday. So thank you so much for being here. And then we also have Alex. Alex actually joined us on Friday. So it is so exciting to see the team growing with amazing, exceptional quality agents. We are happy that the two of you are here. So let us all welcome both Alex and Precious to Team Price and your very first Monday morning touch point. We are super, super excited to have the two of you here, part of the team. Anything that you all need, please let us know. We are here to help you. We are here to serve you and to help you succeed in this business. So welcome to Team Price. We've got quite a few agents right there over chat saying welcome. It is really, really awesome to have the two of you here. Welcome to the team. You're part of the family now. Yo, we've got lots to go over this morning. We're going to talk about rates. We're going to talk about new listing to pending ratio, the single best leading market indicator available for the entire area. And let's talk about inventory. How is January 2025 playing out, and what can we discern for the rest of the year when it comes to the market? As you know, we're going to start by updating this new listing to pending ratio. And for the new Team Price agents, let me go ahead and do a brief overview on what this is, why do we update this, and why is this so important for us in our business. The number that I'm looking for is this right here. That is the number that I live by, because that's going to tell us what is the level of absorption on a weekly basis, and then we also do the monthly. A 1.000 absorption or a ratio, new listing to pending ratio, it's what's called that perfect market equilibrium, meaning you've got 1,000 listings that come on the market, new and back on the market. BOM stands for back on the market. And then if you have 1,000 listings that are absorbed by the market, you're going to have a ratio of 1. Meaning that apart from expireds, withdrawns, or anything else, inventory stays flat and neither increases nor decreases. When you have a ratio over 1, that means that more listings were absorbed by the market in relation to what came in the market. So if you've got a ratio of 1.29, and we can see this right here from November 25th through December 2nd, then you had, in this situation, we had new listings 453 plus 135, and then we divide that by the total of listings that went under contract. That's 760. So you can see that the ratio is 1.29. More listings were absorbed by the market. So blue means cold and red means hot. So that's the conditional format that we have there. So when you see a blue number, that's going to be on the colder side of things. If you see a red number, that's going to be on the hotter side of things. Anything under 0.6, we start getting concerned. That's a very cold market. If the ratio ever gets to like the 0.5, that is a crashing market. If the ratio is a 1.25, then that's a hot market. That means that we had a decrease in new listings, an increase in pendings. So that's a little bit of a background on that new listing to pending ratio. Now, first thing we're going to do is we're going to go a little bit backwards in time, because we all know that agents are really bad when it comes to updating information from the previous few weeks. So we're going to go from the 23rd through the 30th, and we're going to update the pending. Everything locks at 11:59 on Monday, except for pendings. Agents can keep on updating pendings for weeks and weeks and weeks. So what we're going to do is we're going to increase this number, and keep in mind, you all, that we focus on the 6-county area. That's going to be Williamson, Travis, Bastrop, Hayes, Caldwell, along with Burnett counties. And we're going to update this from 166 to 211. That's going to give us a ratio of 1.15. Not bad. So we had 59 more listings go under contract in relation to listings that came on the market. Let's keep on going backwards in time from the 16th to the 23rd. That's going to be, wow, 368. That's going to bring the ratio up to 1.03. And let's keep going. Can y'all hear me okay? Let me do a little sound check. Let's see what's going on right here. For some reason, my mic all of a sudden just kind of dropped. Can y'all hear me okay? I know that the sound, does it sound a little bit weird all of a sudden? Did the sound drop? Yeah, it sounds different. Okay, so for some reason my soundboard just got disconnected, but I've got a failback where it transfers to the camera. So right now it's being recorded through the camera. So for some reason my soundboard dropped, but you can still hear me, and that's okay. Okay, good stuff. It's not going to sound as deep and powerful as the other one, but at least you can still hear me without any issues. And by the way, did Zoom have an update this morning? Oh, yes, it did. Zoom had an update this morning. So there you have it. It's amazing. It's always over the weekend, and something always happens whenever they do an update. It just drives me insane. We're going to go from the 9th to the 16th, and that is going to be 469, 469. Then we're going to do from the 2nd to the 9th. That's going to be 461. You see how amazing? We just have to go backwards in time for so long because agents keep on updating the information super late. 437. We're going to go from the 18th to the 25th. That's going to be 49. So now we don't have to update anything else. We're at 489. Let's start updating this week. That's going to be from the 6th to the 3rd, or it's going to be from the 30th to the 6th. 30th to the 6th. Keep in mind, you all, new price increase, price drop, back on the market, active under contract, locks today at 11:59. So when you get this update tomorrow morning, those fields will be locked. And as you can see, the pending will keep on updating it. So how many new listings over the past 7 days? We're at 550. Okay, 550 new listings so far. How many price increases? Oh my goodness. Wow. Okay, we're going to have to do some further analysis on the price increase because 354 price increases. That is going to be the largest price increase going all the way back. 354. Oh, wow. Let's keep on going. Going all the way back to February of 2023. So the single largest number of price increases going all the way back to February of 2023. Almost 2 years. Okay, we're going to break down that data a little bit further, see how many of them are new construction, what's going on. So we're going to do some analysis there. Yeah, Happy New Year. There you have it. How many price decreases? We're at, okay, this is interesting. So we've got 354 price increases, and we've got 769 price drops. I mean, that's double from last week, but of course that was a combination of Christmas and New Year's, a little bit higher than I was expecting. So there you have it. Let's take a look at back on the market. How many back on the market? We're at 150 back on the market. That's a little bit of a high number. And let's take a look at active under contract. 242, not bad. So almost as much as last week, but this number is going to keep on updating between now and 11:59 today. So this is going to settle, I'd say around the 275 to 280-ish or so. Now, this is where you get to guess how many pendings, you all. You know the drill. I need 5 guesses. I need 5 people to go ahead and write down over chat. What guess do you have? How many pendings? What do you think? How many pendings? Okay, Violet starting us off at 199. Oh, Charmine at exactly the same as Violet at 199. We've got Sonia at 143. We've got Alex at 135. We've got Harold at 223, Seth at 188, Bertina at 170. Good stuff. We've got our 5 guesses. Y'all jumped on it. Let's take a look at it. Let's go ahead and click on it. Okay, we've got 162. A little bit on the slow side of things. 162, that starts us off at a 0.58 ratio. A little bit cooler than expected. So we're just going to have to wait and see what the next, I would say, it's January 6th. It overlapped with New Year's. I'd say agents are a little bit slow on updating pending. Not overly concerned, but we're not going to reach that 1 ratio. That's not going to happen. What was the ratio last year as we went into the beginning of the year? Look at that. Last year was 0.68. It just drops all of a sudden. So that's pretty common. And then it picked back up. So too early to tell, not overly concerned. We're at a 0.58. Last year, we started the year at a 0.68, and then we picked up, and then it collapsed, and then we picked back up. So everything is a little bit seasonal. So we're at a 0.58 right now. We track this weekly so that we can adjust based on the data. Let's take a look at the monthly information. First thing we're going to do is we're going to go backwards in time on the monthly, and we're going to update the pending starting in December. That's going to be 1566, 1566. Let us now update the pending for December. We did November. Now we're going to update December. That's going to be 1384. That's going to give us a ratio of 0.98. December of last year, it was 1.08. So we're off by a little bit. So we're still on the plus side for December. We were on the negative side for December 2023, December 2024. We've been plus the entire year when you look at the actual monthly. Now let's start taking a look at so far January. We're only 6 days into January, but let's see what's going on. We've got 429 new. Let's take a look at price increase. We're at 306. Price decrease, we're at 631, 67%. I am just dumbfounded by the number of price increases so far in January. Just dumbfounded. That's a huge number of price increases. Back on the market, we're at 112, 26% back on the market, a little bit on the high side. Active under contract, 170. Let's take a look at pending. Wow, 76. Wow, only 76 pending so far this year. That's 76 pending so far this year. Look at what happens when we look at the difference. So here it started December 30th, and we had 162 pendings. And then on the monthly, this starts January 1st. And we've had, this is amazing. Violet, go for it. Oh, for some reason I can't hear you. Give me 1 second. Let me go ahead and get this. Yeah, can you go ahead?
I understand why we look at the ratio. What I don't understand is during the months of, October, November, especially November, December, we know new listings are going to be down. And so we have all of these great ratio numbers. How are they relevant at that time of year? I just don't get it.
Well, it's relevant when you can compare it year over year. So when we go back year over year. So when we go back to, let me kind of grab the ratios. Let me kind of go right here. So, and let me adjust this a little bit so you can see the entire screen. And forget that, I'm going to print this as a PDF and it's not going to have all those numbers. So the fact that we've been tracking this all the way, going all the way back to the year 2000 means that we can see in relation to other Decembers, how is this December? So that's why it matters, because not only are we know that December is going to be a higher ratio because we've got less listings and we've got buyers that are taking advantage of whatever's left over, but we can compare every single December going all the way back. That's why it's relevant, is that not only are we comparing it horizontal month over month, but we're also comparing it, vertical year over year. Does that help? And we can see that December 2024 was, a little bit cooler, even though it was the best month of the entire year, 2024. It was the coolest December going all the way back to 2011. So we're grateful that it was the best month last year, but we also have to recognize, all right, it didn't beat last year or 2023, 2 years ago. That's a very good question, by the way. Thank you for asking the question. Does that help? Well, it helps that you're comparing it year over year, right? So your statement was, we know that inventory is going to go down in December and the ratio is going to increase at the end of the year. How is that relevant? Well, it's relevant to the fact that you can compare it year over year, that you can say, okay, well, even though this was the best month of the year ratio wise, then it's still slower than the previous year. Awesome. Good stuff. Well, let's kind of keep on updating the information for the entire month. So we're currently at a 0.45 ratio. Once again, y'all, it's only January 6th. So too early to tell on what's going to happen in January. And we're going to look over some additional information here just to see how we can position ourselves for the entire year. But let us update the sold information. This is going to be 348. And let's take a look at withdrawn. That's going to be 83 withdrawn already. And let's take a look at expired. And I'm going to have to use a different screen to actually search for expired. So give me 1 second so I can pull up that information. And so far this month, wow, we've already had 99 expired so far this month. Now, keep in mind, last year we had a total of 15,458 properties withdrew and expired all of last year. And we know that roughly 27% of those will be relisted within a 2 to 3 month period. So we can expect an increase in inventory just based on that. Let me go ahead and just move this out of the way so that I can print it as a PDF and we can look at some charts related to the entire month and the entire year. So just give me 1 second so I can update this as a PDF and we can actually look at some PDFs. It's just going to take me a few seconds to go ahead and do that. And we're going to go File. We're going to go Export as a PDF. So just give me 1 second so this information can pop up here on the screen, and then we will be able to discuss all of this. It's going to take about 5 more seconds and I'll have that information ready here for you. Okay, perfect. Here we have it. What I want to do is I want to focus on way in the back. Let's take a look. I want to start with the last page. This is actually page number 58. And we can see that now we have a true year-end review for the new listing to pending ratio. So the 25-year average, if you look at every single thing that came on the market, everything that went under contract, it's 0.81, which is a very healthy ratio, but that's the 25-year average. And last year, we ended the year at a 0.80 ratio. That's if we look at everything that came on the market, everything back on the market, everything that went active under contract, everything that went pending. That's going to give us a 0.80 ratio, just slightly under the 25-year average, a little bit under 2023, 2022. Don't really get too obsessed with this 0.45. We're only 6 days into the month. it's going to go up. We know it's going to go up. So we know for a fact that's going to go up. Okay. Melanie is saying, how was 2023 better? 2023 was a catastrophe. Well, I will say this, what happened is we had a really tough beginning part of 2024, and we were in essence rescued by the third and fourth quarter of 2024. So 2024 certainly feels exponentially better than 2023, but that's because of the half of the third quarter and the entire fourth quarter of 2024. First quarter of 2024, it was brutal. Data wise, it was absolutely brutal. But here's the encouraging thing. Take a look at this. I don't have 2025 here because we're only 6 days into it, but this is really interesting. And I'm going to start right here. So ignore 2025 and let's do a year in review for 2024. We had 47,547 new listings that came on the market in the 6-county area. That's a record high. So we beat out 2022 when we had 47,122. So we have 47,547 new listings. 7,816 back on the market. That's 16% back on the market. That's a really nice low number back on the market. As a matter of fact, the lowest number going all the way back to 2003. 21,973 properties went active under contract. 22,000, which by the way was better than 2023, right? So there's your number right there. Melanie is like, okay, well, yeah, that was better. Absolutely. But look at the pending. We had 22,065 property go pending. 22,258 went pending 2023. And that's going to give us that difference. The reason why 2024 ratio wise was less than 2023, new listings. So we had very similar properties go under contract. We had more properties go under contract in 2024. We had 44,038 versus 43,723, right? So 2024 was better than 2023 when we look at pending, but the ratio is lower because when we add everything that came on the market, the new listings on the market, it's going to drive that ratio just a little bit lower. Does that make sense? 31,176 properties closed. That's going to be better than 2023. So there's another indicator of it being better. So when you look at the year over year, and this is great, great news, you all, we had more new listings. I wouldn't put that on the great news category, 8.7% more. But here's the great news category. Active under contract, 2.4% more. So more properties went under contract at a 0.7%, and then more properties sold, 0.3%. 79 more properties sold 2024 versus 2023. And the good news is that when you look back, last time we had a market correction, pendings and sold were negative for 4 years. This time around, we've already broke that. It's 2 years. We already broke that pending and that sold. And that's really, really good news. And Violet says, so do you think that we've already hit the bottom? And Violet, it certainly feels that way. It really, really does. We were down by over 20%. We're noticing a recovery across the board on pricing. We now have a recovery on pending. We've got a recovery on sold. Very similar to what I said last week and even towards the end of the year is that I am less cautious, more optimistic, and I would say it would not surprise me at all if come March, April, we look back and we're like, yeah, you know what? The bottom was October of 2024. Now here's the recovery that we've been hoping for. There are two variables that we cannot oversee and we cannot ignore. The two variables, and I would even put interest rates as one of those variables. Today is not a good day for the bond market. We're going to talk about that shortly. So we're in solid 7% territory right now. We could very well, let me see if I have a rate sheet here today. It doesn't look like I have a rate sheet here quite yet. Let me see. So I don't have a rate sheet here quite yet, but we're in 7% territory right now. I'll see if we're going to cross a repricing line today, but we could very well, if things don't slow down in the bond market, we could hit 7 1/8 today. And 7% really is the magic number where demand for real estate does slow down once you cross that 7%. So that's certainly one of those variables, monetary and economic policy that affect us. The other so two other variables, there are three variables. One of them, of course, rates. The second one is going to be, are we going to see this massive influx of new listings like we saw last year? And when the massive influx of new listings hit us last year, let me see if I can find that. Pending, back on the market, new. Okay, here we have it. Look what happened last year. And this is where we have to be cautiously optimistic. So look at what happened. 4,079 listings hit the market February. And we all know what happened with the market between February and even going into June. It just affected pricing. It just stalled. We had way too much inventory and prices dropped. Of course, buyers were delighted. I mean, there's always opportunities no matter what. But we did see an explosion of new listings hit the market between February and May of last year. And the variable that we have to consider is, well, is that going to happen this year? And it's too early to tell. We've already had 429 new listings come on the market. Let me take a look at this really quick. I'm going to go back to the number of new listings. Let me see. There's no way that I can pull it from last year. So let me see if I can. So I'm going to go property history, residential, new listings. And what I'm going to do is I'm going to go from January 1st to the 5th. And I'm going to focus on the 6-county area because I'm not going to do the 6 because it's only half day. So 412 so far this year. And then last year, same time period, 604. Last year, from January 1st to January 5th, we had 604 new listings hit the market. So far this year, 412. So we cannot rely on only 5 days worth of data. But so far, that's a huge difference. That's a massive drop. That's a massive drop. Were there a lot of withdrawns in 2023 that re-entered the market early 2024? Yes, absolutely. And then this year we had more withdrawn. Last year we had more withdrawns than the year before. And then, of course, the last variable that we cannot ignore, and it's totally outside of our control, I mean, all of these are, it's going to be the national real estate market. Is the national real estate market going to enter a sustained correction like Austin did back in 2012? And there are a lot of warning signs indicating that. Regardless of what happens, I cannot think of a city that is better positioned than Austin because we've already experienced a 20% price drop. So even if the national market starts going south, well, we've already experienced that. So for us, it's really a matter of how fast of a recovery are we going to have, and are there factors that are going to slow down that recovery? If prices are still going to correct in Austin, I do not see it correcting more than 5 to 7%. There's no way. Worst case scenario, 10, I don't see that happening. But if there is a deeper correction that Austin is expecting, no more than 5%. And the point that I'm making to buyers, even personal friends of mine that are considering buying, and they're saying, well, we're just going to wait till prices drop more. And I'm like, how much more do you want prices to drop? Like, how much more? I'm like, 5%. I'm like, so then make an offer at 93 cents to the dollar. Get that 5% right now. So those are some of the factors that we really have to be attentive to on what's going to happen in the next few weeks and the next few months. But so far, very encouraging when you look at the number of new listings compared to the number of new listings last year. Very encouraging. Let's take a look at a few more things right here. Oh, you know what? I want to do this because we spoke about the number of price increases. And what I want to do is I want to dissect the data a little bit. Let me go ahead and just move the MLS over to this screen. Because what I want to do is I want to take a look at the past 7 days under Market Watch and look at these 318 price drops. What is going, let's go single line. Let me grab every single one of these and I'm going to export. And these are supposed to be price increases. Yeah, price increases. So these are all the price increases. Let me export this as an Excel and let's see how many of these were or are new construction. Here are all the price increases over the past 7 days. And what I'm going to do is I'm just going to create a quick little pivot table. Let me make this a little bit bigger for you all to see. And we're going to go year built, and then we're going to count. Oh my gosh, look at that. I mean, come on, that's just ridiculous. That's just unbelievable. Let's do a show value as percentage of grand total using a percentage, and let us sort based on this. I mean, we don't even really have to sort. Let me get rid of the blank. And there we go. We can say that the 2023s are also new construction. So out of the 317 properties that had a price increase in the past 7 days, 94.5% are new construction. 94. I would even say that this 2022 may be a new construction also. I mean, we can look at it and see if it's a new construction really, really quick. And these are the 2022s. Is this new construction? Yep, new construction. So that's a new construction. And how about this one? Is this going to be new construction? These are the 2022s. And it does not, no, that's not a new construction. Well, no, that is LGI Homes. That's the owner. That is a new construction. Well, that's pretty. That's really nice. I like that. So let's go ahead and add the 2022s. So now we're looking at, over 95%. So builders are back to their famous strategy of everything's great, the market's great, things are encouraging, we're raising prices. They're back to that strategy. Time will tell, see if it works or not. I don't think it's going to work personally. I don't think there's enough momentum within the market, especially with interest rates approaching that 7 1/8. I don't think it's going to work. I think they're going to backtrack on these price increases. Once we start seeing the resale market increase price, that shows momentum. But when it's only the builders increasing price, that's not momentum, that's marketing. So I don't care about that number. The fact that 95.3% of all price increases over the past 7 days are new construction, could care less about that. That makes no sense for me why builders are doing that. I certainly don't trust that strategy at all. Okay, let's take a look at the bond market, you all, and look at the economic calendar also. Let me do a really quick refresh on the bond market. Okay, well, this is good news because by the way, Friday was brutal. We started the day Friday really nice, and then we just blew past a repricing line. For some of the newer team price agents, we track the 10-year treasury as a correlation to mortgage-backed securities. The 10-year treasury and a 30-year mortgage-backed security, they correlate with each other. Well, what do we mean by correlation? If you go to Insights and Statistics, you click on 30-year mortgage. This is where we track the Freddie Mac average mortgage rate. And then we've got a graph right here with the 30-year mortgage and the 10-year treasury. And you can see it's a correlation, not a causation. An increase in the 10-year treasury does not cause an increase in 30-year mortgage rates. They correlate with each other. And we've got this information going all the way back to January of 1971. And you can see 10-year treasury goes up, mortgage rates go up, not because it causes, but because it's simply a correlation. That's all that it is. And it's a lot easier to track the 10-year treasury as opposed to tracking mortgage-backed security pricing. Because mortgage-backed securities, you track that based on the price. Here, you track that based on the actual yield. You can track based on the price, but it's a lot easier just to track on the yield. So it started off the day going quite up. And there's a reason why it started the day on a pretty bad high, going past 4.62. And you have to look at the economic calendar and what's going to happen today. So there were some misses today, and that's related to the Standard & Poor's Service PMI, and that's the Purchaser Manager Index. But the miss is a little bit misleading. Let me go ahead and show you and break down this data for you. And here we have the economic calendar for the day. So you can see that the global composite PMI and the service PMI, both of them were considered misses. Specifically, the service PMI. So that's the Purchaser Manager Index. And okay, well, what in the world are we talking about when we say the Purchaser Manager Index? So what this is published monthly by Market Economics. And what they do is they survey 400 executives in private sector service companies. And that includes business, personal service, computer, IT, hotel. An index of 50 denotes no change since the previous month, while a level above 50 denotes an improvement. So that's improved economic conditions. And let's go back here. They had a forecast of 58.5. The previous was 56.1. It came in at 56.8. So they're like, well, that's a miss. Well, yeah, it is a miss based on their forecast, but here is why that miss is really misleading, because it's at the highest level since early 2022. Take a look at this. This is the actual line, and here's the 56.8, and it's the highest level since right there, April 2022. And it's increasing. So it really shouldn't be a miss, right? That's really the bottom line. And then there's the business confidence component, and that's at an 18-month high. The employment rose for the first time in 5 months. So these are all really, really positive economic indicators. They were overly ambitious, not only on employment, but service sector. So they were overly ambitious. It was a miss, but it's positive. So that's why we're seeing an increase within the yield. That's the first one. The second one is that we've got some bond auctions. We had a 3-month bond auction here that just happened. That fortunately came in a little bit less than the previous. Same thing with the 6-month. But when you look at the entire week, this week, let's take a look at this week. We've got a 10-year auction right there, and it's a big one. The government is auctioning a lot of debt here over the next few months. So if you flood the market with an asset, Well, think about homes. If you flood the market with new listings, what happens with pricing? Well, it goes down. If you flood the market with 10-year treasury, well, what happens with the price? It goes down. If the price goes down, what happens with the yield? Well, then the yield goes up. And that's what's happening. The market is anticipating an increased availability of treasury bonds because the government has to monetize their insane decisions, their insatiable appetite for debt. And with the increase bond availability, well, then investors have more to pick. Then the price is drawn down. Therefore, the yield goes up. If the price goes down, the yield goes up. If the price goes up, the yield goes down. So we are noticing those two factors at play. Number one is even though it's a miss on service sector PMI, it's better than what it's been in the past. I mean, we've got a lot of really good leading economic data. And then we've got an increase in the availability of debt that's going to come here in the market over the next few months. That is what's causing the increase. Let me see right here. And as soon as I get a rate sheet, I will send it your way. So the second that I get a rate sheet, I'll send it your way. But I'm just going to say that right now, we're not noticing lenders repricing quite yet. We may see a repricing here over the next few hours, but we're at 7%. So you can just say we're at 7% right now. Unless this line gets closer to that 4.6, we're going to see of 7.125. As a matter of fact, I'd say quite a few lenders are already going to reprice at 7.125 at 7 1/8. Any questions, you all? Any questions on rates? Any questions on what's happening with the economic calendar? Very important week, more so towards Friday. And by the way, here they're saying that January 9th is a national holiday. What holiday is January 9th? January 9th holiday? What holiday is it? I have no idea January 9th was a holiday. What is that? Oh, that's the funeral. That's President Carter's funeral. Okay. Yeah. Interesting. So there you have it, January 9th. But I mean, everything else is open, right? I think it's just the federal government that's just taking that off. I mean, it's not like banks are going to be closed or anything. I think everything else is going to be open. So interesting. I don't know. Maybe our title company is going to be open. Have y'all heard anything from title companies on whether or not they're going to be open January 9th? I'll have to follow up with them. I'll let y'all know. We also have a possible inclement weather cancellation, weather.com, because you all know that when Austin gets a little dusting of anything, Austin does what? Austin absolutely shuts down. And on Wednesday, possibly Thursday, some forecasters are saying that we could very well get some rain and sleet, not really snow, but that's what the forecasters are planning and forecasting, maybe planning. That's what they're forecasting. 93% chance. There you have it. So good opportunity for us to remind you what the team price policy is on office closure and meeting cancellation. Do you remember what the team price policy is on meeting cancellation and office closure? If the school district cancels, we cancel. That's it, right? If you have to go out there and just deal with, if the school district cancels, we cancel. That's it. Okay, title companies are open on the 9th. We have a closing on the 9th. So there you go, Mike. Good for you. That's awesome. Congratulations, Mike. And by the way, congratulations on your fantastic January. You're doing absolutely amazing. So way to go. Super proud of you. So we've got Thursday, we've got small business optimism. That's going to be big. But the big day is going to be on Friday. Friday is all about employment. That's when we have the unemployment rate, the participation rate. That's going to be a really, really big day for bonds. It's going to be Friday. And of course, we'll keep you updated on everything related to rates. As soon as I get the rate sheet, I'll send it your way, but we'll keep you posted. Let's talk about inventory right now. And as of this morning, we have 10,973 active listings on the market. That is two higher than Friday. That's 670 less than a week ago, 1,673 less than a month ago. That's going to give us a 13.23% drop from a month ago. Year over year, we are up 10.9%, a little bit higher than Friday at 10.8. But look at the pendings, you all. And this is where I say that I'm cautiously optimistic because we are now back to negative year over year on pendings. 3,238 pendings as of this morning. And that's going to be a drop of 0.2% compared to exactly a year ago. That's going to give us an activity index of 22.8%. Months of inventory 3 days in a row holding steady at 3.85. When you look at the activity index, what do you notice the new construction activity index? Do you remember what number that was for months and months and months? It was over 30%. Now it's at 28.86%. And yet builders are increasing their price, which makes absolutely no sense whatsoever. So let's take a look at active listings. Here you can see the gray one is 2023, the red one is 2024, and the bluish purple one is 2025. And we're at 10.9% increase in active listings compared to 2024. And let's take a look at pending. And let's find pending here. Let's see if we can. Okay, there's pending. Pending 2024, we had 3,246, and pending this morning 3,238. So that's a drop of 0.2. So for the first time in a while, we now have negative pending compared to last year. It's the first time since October of 2024. This line is going to show you the year-over-year percentage change on pending. And we've been on positive territory since October of 2024, and now we have less pendings compared to a year ago. Melanie is saying, can we add 2023 to the pending chart on this one? Let me look what the data. Let me see what the data looks like and see if it kind of. I'll send me a text message or send me an email. Better yet, send me an email and I'll play around with it because some of these we might not have tracked at that time. So send me an email and I'll play around with it and see if that's information that we have available. We should have it available. Now, out of all the listings that are currently on the market, 10,973 active listings on the market. 50.5% of those have had a price drop. 45.3 have remained the same, and 4.2 have actually had an increase in price. And I want to remind you all that all of this information is available on Insight and Statistics. Every single one of these have been updated, and I am working on the 2025 so that the market cycle, this right here, by the end of the day, we're going to start publishing the 2025. So you're going to see January 2025, and then you're going to start seeing everything here with 2025. It just takes a few hours just to update everything and make sure that everything is absolutely perfect for you all. It is 10:49, you all, and I do want to open up any questions. Questions. Violet. The amazing Violet. What's that? If school districts are closed, then we're not. If they're open, then we are. Oh, because now we're going to review it on Wednesdays. Yeah, we're going to. Yes, plenty of time. 48 hours. Just wake up at 3. I'll send you a wake-up call. I'll give you a call at 3 when I wake up. How does that sound? We can do it together. Does that sound good? I'll let you sleep until 3:30. Yes, I'm so glad that you mentioned that, Violet. I want to remind you all that the contract proficiency development is posted. And here's the other thing. So we've got the 2025, and I also created this Google chart. So you can go ahead and click there. And then you will have the correct contract right there that you can review and compare it. But let's go ahead and take a look at this. You've got plenty of time. You've got until Wednesday, January 8th at 9 a.m. That is like, oh my goodness, I could, plenty of time. Here's the property that I selected. It's a very nice looking home. And this is going to be a $500,000 offer, 20% down payment, 7% interest. The seller will be paying the commission. The buyer wants $2,500 for closing costs. This is a backup offer. Include TXR 1909 for the backup contract. So there you have it. So here's the thing. From now on, instead of having the contracts due on Friday and then we review it like next Wednesday, no. So it's going to be due on Wednesday by 9 a.m. And guess when we review it? We review it Wednesday, right? So that's what I'm doing. So due on Wednesday, review on Wednesday. Now, guess when you're going to get the new contract? You're going to get the new contract on Wednesday. So right after the Wednesday training that we do, like at 1 p.m., you're going to get the new one for the following week. Does that make sense? So yeah, right now, this one is due on Wednesday, but then on Wednesday, this Wednesday, the 8th at 1:30 p.m., you're going to get the new contract proficiency that's then due the following Wednesday. Does that make sense? So that's going to be the cycle. It just works out way better that way. Because you all know this about me. There are two things that I love. Number one is improvement. I always want to improve. Number two is change. I love change. So I know that some people are a little bit resistant to change, but when change is for the sake of improvement, you've got to love it and embrace it. That's it right there. Any questions, you all? Good question, Violet. So please do the contract proficiency. That's going to include the brand new backup addenda. So be sure to do that one. We already have a few people that started that. So way to go. Any other questions? Questions, comments, concerns, criticisms? Change is an inevitability. I 100% agree with you. That's the only constant in life is change. Are you reviewing them or are we grading our own homework? I would never trust you all to grade your own homework. I am reviewing it. Yes, I'm absolutely reviewing it. This is a feedback that I received from a few agents. It's like, hey, can you actually post like a link to the PDF of the correct contract? So what I'm going to do is whatever agent does it perfectly, I'm just going to save that as a PDF and then just have that as a correct contract. If we don't have an agent that does it perfectly, then I'll just create one and I'll save it as a correct contract. But I really like the idea of having like the correct contract. And then actually right here, this will be like the video. So people will just be able to click on the video showing you how to do the correct contract and then the actual correct contract. I think that's a really good idea. So you've got the scenario, then you've got the correct contract as a PDF, and then you're going to have the video of the correct contract. I think that's a good idea. What do you think? So then we'll have a continued list of all of them. And if at any time you're like, I wonder what a backup contract looks like, you can just go to the contract proficiency backup contract. You've got the correct contract. You've got the video supporting it. You all 2025 is going to be our best year ever. I'm telling you, I can barely sleep. I'm so excited. I could just squeeze a grape. I'm so excited. I am so excited for 2025. It is going to be the best team price year in history. Any other questions, comments, concerns, criticisms, complaints, compliments? Any other questions? I did receive notice that a few of you all did not do your code of ethics. So a few of you, if you get cut off, I'll contact you personally. But if all of a sudden you see yourself not being able to log into the MLS, that's because you missed the deadline for the code of ethics. So I'll reach out to you personally. Not that many of you. I'm really proud of how many people actually did that and just went ahead and just got all that done. But a few of you, unfortunately, did not do that. So I'll reach out to you. We've got our mentorship meeting tomorrow. And Stacy Morales, are you here, Stacy? You are here. Stacy, I need a favor from you. In Iden, I need Stacy and Iden. Stacy and Iden, the two of you, can you unmute yourself? I need the two of you to do a better job than I would be able to do getting people to join our mentorship meeting tomorrow at 10 a.m. So I'm going to shut up and let the two of you just do your thing.
The best part is not recorded. You can say whatever you want.
Very true. We do not record our Tuesday, so you can share all the, all the joys and all the sorrows. So that's a very good point. But how has it impacted you, Iden? How has the Tuesday morning mentorship meeting impacted you personally?
My business. This past year, I went from 1,050 commission my first year to over 100K this past year, only by going every Tuesday and listen to Dan and to the other agent that have a lot of time and team price.
That is awesome. That is awesome. I'm so unbelievably proud of you, Iden. I mean, from reviewing your first contract and the contract proficiency to seeing you get your first deal, incredibly proud of you. Incredibly proud of you. And so thank you. Thank you for sharing that. Stacy, I want to hear from you, and then also want to hear from Melanie Price. So Melanie, go ahead and unmute yourself. Stacy, how has the Tuesday morning impacted you? And make your pitch for people to join us tomorrow morning at 10 a.m. live in person. And then Melanie Price, you just go right after Stacy. Go for it.
Cool. It is very motivating. And to Iren's point that it's no holds barred and it's not recorded. But for some reason, when she said that, I was like, well, it isn't just all sitting around saying swear words or anything like that. We actually, sometimes we're confiding our fears and challenges, and there's just a lot of disclosure in terms of like, here's what I'm doing, or here's what I did and didn't work for me. But then we changed direction. And that is very motivating to me to hear other people. We kind of, what is that? Those things they say in corporate, like we open the kimono, or, we really learn about our processes. But it's extremely, there's nothing worse than going to Tuesday and being like, I didn't do my envelopes yet, which is typically me every week. But I always get my envelopes done because I don't feel like going in there and saying I didn't do my envelopes. There's a little bit of that social accountability that has helped me tremendously. Even though I do my monthly mailings, it keeps a little bit of fire under my keister. But and also it's really fun. It's really awesome to witness other agents, shining, and it's exciting. So I'm going to shut up with that.
No, that was absolutely fantastic. That was perfect. Thank you so much for sharing, Stacey. Super appreciate it. And then Melanie Price, I want to hear from you. Tell us.
So, of course, what both of them said, and it truly is like a mentorship. So it gets very personal, and it's, what are you dealing with? What can you do to combat that and get to the other side? Because it doesn't matter how long you've been in real estate. We all have ups and downs, and 2023 was a catastrophe for me. And I started going to the mentorship last year, and I don't know what it is, but it motivates you every day to get out there and do your thing and just, keep your head down and keep going. And when I looked at my production report, like late in the year, I was like, oh my goodness, I had my second best year in real estate, and I didn't even realize it because I was just going, going, going. And, the mentorship, it gets you up and out of the house and ready to work in the business.
That is awesome. And way to go. Way to go. Second best year in real estate. And you've been in business for how long? 11 years, 11 years, second best year in real estate. Way to go, Melanie. Super, super proud of you. Thank you for sharing. I remember one time where we put forth like almost like a challenge for the team that regularly comes to the mentorship meeting. And we're like, hey, you know, what do we have cooking? Like, what are we working on? And we went around and everyone was working on a deal, like some people, multiple deals, but I love it. I want to get to the point where I'm having to rent an auditorium at ABOR for the mentorship meeting. Y'all, it is probably my favorite meeting of the entire week. It is my favorite meeting the entire week. I love the Tuesday morning mentorship meeting. So please join us. It's super exciting. It's awesome. We make it really actionable. We make it fast, whether there's 5 people or 15 people or 20 people. It's just a very packed hour. So be sure to join us. Well, y'all, it is exactly 11:01. I want to honor your time. So let us go ahead and just really hit it hard. Do not forget, market reports are due right here January. I will send another reminder for everyone with the market report template. We went ahead and created the market report template that you can use for your clients. When you go to the team price folder, you go to relationship nurturing, you go to market report, you go to card example. Here's a fourth quarter, January 2025 market report template. I wrote that for you all, or my assistant wrote this. You know who my assistant is. I will send you an email, both Alex and Precious. I'll send you all an email pointing you in this direction, and I'll have a conversation with you all on what this means. What do we do with this? So I'll point you all in the right direction when it comes to this. But y'all, this is super, super important. Market reports. You got to do market reports no matter what. Thank y'all so much for joining. Super appreciate it. Have an amazing rest of your day, and I will see you hopefully tomorrow. Be on the lookout for an email summary with all this information and a link to this meeting. If you have any questions, comments, concerns, criticisms, or complaints, please let me know. Here to help. Otherwise, have an amazing day, and I will chat with you later.